Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. Now, as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a clear uptrend. The market has been creating a series of monthly higher highs and higher lows. So we are still with an intact monthly uptrend. We had a new higher high here. The previous higher high was here, and the first one was here, in which the market broke out from this previous level of historical resistance, from which all these rejections to the downside were created. After the breakout, we had the retest, and we had the first higher low, a new higher low here, and now, as we have already seen, we are still with an intact uptrend, and the market looks quite bullish from a monthly standpoint. So let's keep that in mind and drop down on the weekly time frame. From a weekly perspective, we had a perfect example of a strong weekly impulse phase. Then we had this consolidation pattern. In this case, it was in the form of a triangle formation. And a triangle formation is simply the creation of lower highs and higher lows at the same time. And then we had the breakout to the upside. So that is a very popular pattern in the market. We see that all the time. We see the impulse, then consolidation phase in the form of a triangle formation, and then breakout to the upside. And that is exactly what we're seeing here. So also the weekly time frame definitely seems quite bullish. Also on the weekly, we have an intact uptrend with the creation just now of a new higher high after this higher low, and everything looks quite bullish. So let's keep that in mind and drop down on the daily time frame. Now, from a daily perspective, this is where things get quite interesting, because on the daily we can see a very strong impulse to the upside and now the start of a correction. Now, if you have a strong impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, and if we do that, we can see how we have the 0.32 and 50% retracements currently lining up exactly at this area. This means that we have a good probability that if the market will reach that 0.382, we could see even more institutional longing. Now, why am I saying institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, we can notice how they are currently adding longs once again. We just had an increase of net positions from 236k to 257k, meaning that institutions are moving once again back to the bullish side for gold, adding 25,000 longs, reaching 321,000 longs compared to only 63,000 shorts. So currently gold looks quite bullish with institutions aggressively longing it. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So if the market here will actually go and test this zone and we will see more institutional longing, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, these are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to continue that uptrend that we have seen already on the monthly and weekly timeframes. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.